This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end-of-day day trading and swing trading report for Tuesday, March 31st. We're going to be talking primarily about ES today. Absolutely incredible day. I'll show you some of the results, show you some of the trades. Very important level that failed up here at 35, 36. So let's talk about that first. Everything that our algorithms do is based on price, but more importantly on time. When you build algorithms, you can't anchor them to price because price is linear. I mean, price hypothetically goes from 0 to infinity. Well, you can't anchor anything to that. Look at a clock. The clock's round. There are the same number of hours, minutes, and seconds in every day. There's the same number of hours, minutes, and seconds in every trading day, except the odd half day that we get occasionally. Now, there are 7 primary time cycles, and there's some very, very powerful derivatives of those time cycles when you combine them together. One of the most important things we do is about 2 hours before the market opens. I start calculating our algorithmic pivots. One of the first things I do is calculate the daily algo bull bear pivot. And that is the single most important price point for the entire day. Now, with this amazingly strong move that we've had, the last couple of days we have recorded one of the most overbought readings in history. Now, you might be thinking, well, how can we be more overbought now than we were at 33.97, the all-time high? Because overbought readings algorithmically are a function of price and time. So the size of the movement in price is very significant, right? Over 20%. But the compressed amount of time that it did that in is what gets you the algorithmic time price overbought reading. So let me show you. We went short very early this morning. So here you go. Here's our daily algo bull bear pivot. Calculated, and actually it was calculated a little bit before 7:30. I took this screenshot when we put this on here. And then you can see, actually, this is a screenshot of the result. But we got short at 7:30, 26.05, 26.06. And everything that I discuss with you on these videos is documented and timestamped on our member Slack channel. So here you have the first trade in the morning, 26.06, short entry. Why? Because when you get a very strong move up that's very overbought, this daily bull bear pivot was much, much lower yesterday. I don't recall exactly where it was, but it was significantly lower. So when you start the day with the bull bear pivot this high, it's a very high percentage short before the market even opens. Why? Because the bulls have to take this thing significantly higher right off the open, or they've got problems. So we shorted this at 7:30. Again, here's the timestamp. 7:33 is when I typed it in, so maybe a minute earlier than that. And the point I made was ES had all night to attempt to trade above last Thursday evening's high, which was 26.35.36. It couldn't do it. And this is the note exactly as I typed it in. The daily algo bull bear pivot's 26.05. My preliminary read of the algos the night before, talking about last night, was that pivot was going to be over 2600. So we shorted it right off the bat. And here's what you got. You got a fast move down to this purple line, which on every time cycle we have, if you've looked at our tweets, you'll see this purple line in a lot of the screenshots we post. On every time cycle we have, this is an incredibly important level. This is the big one. And it doesn't matter whether it's a short time frame or a long time frame, but you can see that fast move that you had down when you broke 26.05. So we were taking profits into that. So that first trade yielded, what was it? Bear with me, folks. 19 on the first third, 28 on the middle, and 49 total. Now, you're probably wondering, well, how in the world do you book 49 handles when you were in short at 26.05, and it found some support at 25.73. I believe we do a better job of risk management than any trading service on the market. We trade in thirds. Now, that means any contract multiple that you can that is divisible, by 3. So that could mean 3 ES minis, it could be 3 micros, it could be 9 micros, anything that's divisible by 3, because the idea about trading in thirds is when that trade starts to go in the intended direction, you take your first third of profit and you get some risk out of the trade. Now, typically when we take the first third, we're not getting 19 handles, okay? Typically the first third you're looking for 3, 4, 5, 6, whatever you can get, so that you can take a third of that position off and reduce or eliminate the risk in the trade. Then you look for where you're going to take your middle, and you want to give it some room for the middle. Now, again, this wasn't an ordinary trade. It dropped really fast. So on that first third, it was 19. The middle, it was 28. And then the runner is that last third of the trade. So you add up those 3 pieces. So let's say hypothetically you were trading 3 E-minis. Well, that's where you get 19 plus 28 plus that last piece, that's 7 on the runner. That gives you 49. All right, now, why were we so aggressively looking to short this level? Probably the most unique thing that we do is what we call time price regression lines. So you notice this cyan line, all right? This looks like, your typical channel line, right? These are not channel lines. They have a very deep mathematical formula behind them, because what it takes to build these regression lines, and I have not seen anyone else in the industry do this, but these look like channel lines, but they're based on price and time. So now this is an early screenshot. I'll show you what this looked like on a little bit different time frame. But notice what happens every time it comes into this regression line. It's this cyan line we're looking at right here. Goes up to it and dies. Goes up to it, pulls back. Comes up to it again, pulls back. Every time you see this. And this price 26.37, 26.36, that was the high last Thursday evening, which was the 26th of March. We shorted it then. So we were aggressively, and I put out on Twitter, this is a level to aggressively short. So the first trade was right off the bat, 2 hours before the market opened. Break of our bull bear pivot at 26.05. Get you the move down here. We're taking profits down into it. Now, the big trade that we had was a little bit later in the day. Oh, and by the way, there was an NQ short entry in there at 79.78, a book 10 on the first half. Now, on NQ, I trade in halves. NQ moves around too much to be trading in thirds. Remember, trading NQ is $20 a handle. Do not trade NQ unless you're very, very, very experienced. $20 a handle, the way this thing moves around on a one lot, you can get your tuchus handed to you pretty darn quick. So when you trade NQ, if you trade NQ, you get that first bit of risk out, 4 or 5 handles, whatever you can. So this was 10 on the first half of the trade, and I trailed a tight stop because I don't mess around with NQ, and 34 on the runner. So that's 44 on a 2-lot NQ. $20 a handle. It's $880 on a trade that was put on around 10:46. That was a 20-minute trade. Now, again, the disclaimer, past performance is not indicative of future results. We're not telling you that any trade that we put out is going to make $800 in 20 minutes. You know how that works. With potential great reward comes extreme risk. Futures are very volatile. Futures inherently have leverage. And then when you add margin on top of it, you're adding leverage on top of leverage. So you do not trade any of these instruments. I don't care if it's ES micro minis. You don't trade these things unless you have account funded properly and you only risk a very, very small portion of your account on any trade. But we had this NQ trade in here. Now, the big one was right here at 26.23. That trade booked, and we actually got into that trade a couple times. 45, we got stopped out at 25.99, and then we put just 1/3 back on the runner. So between those three pieces, I mean, here's the accounting of it. Let me scroll down. Forgive me. Here we go. So we had 36 on the runner, which was a total of 82, adding up the three pieces. 82 handles on a trade that we got in shorting at 26.23. Now, I put on a swing trade. If you're a swing trader, our system, we do predominantly day trading, but I love swing trades because our algorithmic metrics, I mean, I can tell you precisely the levels at which ES and NQ are algorithmically overbought or oversold. So I had a swing trade that was entered yesterday at an average price of $25.94. That was taken off. I was pretty conservative taking that off. And that swing trade, I think in total, that booked well over 100 handles. So whether you're a day trader or you're a swing trader, our service is very unique. The time price or the time cycle algorithms that I use are the exact same time cycles that the institutional algos use. Exactly the same. Now, how can I make that claim? If you and I and everybody we've ever met in our lives put all our money together, we could not make ES stop to the tick the way it does in our systems. So let me go over here to a live chart. So let's look at how precisely price moves. Stops down here at our tick point of control, literally to the tick. Comes back up here to our midday pivot, to the tick. Comes down here to our multi-day short cycle pivot, to the tick. This is one day we're talking about, over and over again. From there, you go back up to, again, to our daily bull bear pivot, which I showed you at 26.05, to the tick, over and over and over again. This is our Globex pivot from last night. And when I say to the tick, we're talking about a tick or two. Now, this is interesting. You came up here just under a daily bull bear pivot at 26.05. All right. Dropped 60 handles and stopped almost to the tick at our swing trend pivot, which today was 25.47. Then you come down again to this level, our price acceleration pivot to the tick. So you see how many times it does this to the tick, and that's why I'm saying it now, and I've said this on many, many videos. These are the exact same time cycle algorithms the institutions use. There is no way that you and I can stop ES or the SPX futures to the tick. The only entity that can stop price to the tick are the big institutional algos, and you see it here, I mean, all over the place. Now, these orange trend confirmation pivots are astoundingly accurate. You had a high today up here at 26.36. You come down to our trend confirmation pivot at 25.73. Stops within a tick. Comes down here to our swing trend pivot. Again, orange pivots are trend pivots to the tick. And in this evening's trading, what you're seeing, once again, you came down here to the tick to the purple line again. Now, we actually took a long trade right down here this evening at 25.31. Now, yeah, that's very counter trend. But because we take our first third and our middle quickly, we get our risk out. So right down here, you had this move down this evening, and I'll show you the entry. Right here, you had a low of 25.30.50. Now, because we have algorithms this exact, you have a low of 25, 30, 50. All right, 30, 50 is your low. And this video is being recorded at right now it's 9:21 Eastern time. So this low here is 25, 30, 50. Here's the call to get long. 2 ticks off the low. 25.31 took a very, very quick middle because we're trading against this very fast move down. Okay. So it took 3 on the first third. Took a very quick middle, 5.50. Again, we're trading against the trend here right now. And then the stop is 25.39. And while we were recording this video, it got stopped out at 25.39. So that trade was in at 31. He had 3 on the first third, 5.50 on the middle, 8.50, and we had another 8 on the runner. So that's 16 and a half handles on a trade where we knew we were likely going to get stopped out, because I'll tell you what this thing wants to do. It wants to come down here to 25.22. It may not do it tonight. It may not do it in the overnight Globex. This is coming down to 25.22. Write it down. Now here, this red line, you have another one of these regression lines coming in. Now, I just want to show you as we wrap up here. This is one of our most important time cycles. Now, this is today, Monday, Friday, and Thursday of last week. Now, look at how precise this is. And I want to get back to the point I started with, and that is we aggressively, we shorted the tar out of this algorithmic time price regression line 5 times here last week. So there you had a move from like 25.50. You had a 150 handle move. Where did it stop to the tick? Right here. Purple line again. Infamous purple line. Here's another move up to the regression line. Shorted that. And we made a nice profit on that too. Shorted this. Shorted this. Didn't get much out of that one. And this was a really nice one today that we shorted. And we got out of that. I forget how many. That was the one that was 82 handles on a 3 lot. But this does want to go down to this 25.22. And let's see. Here's your 25.22. That's where this wants to go. So that's going to wrap it up for tonight. If you haven't been to our website, it's mercurysignals.com. And there you go. You can take a look at our ESNQ system, our bonds crude oil system. If you click on technicals, it'll show you. It's incredible the amount of systems that we have available for you. And we do have annoying pop-ups also. It's going to be another one in a minute. So, for example, if you click on technicals, that's going to show you all these different technical systems we have. There's the chart I just showed you. These are the metrics available across ESNQ bonds and crude oil. There's the second one. ESNQ bonds and crude oil. And then we have a number of pivots exclusively for ES, for the S&P futures. There is no consumer service that does what this does, period. It's also very unique that we give you a full ESNQ service and a bonds crude oil service, all for one price. What's the price? Go to the website, please. Click on subscriptions. You'll see the price. It's one price for both. We bill bi-weekly, not monthly, so you don't even have to commit to a month. We do not charge for the annoying pop-ups. They come with the website. But please take a look at our pricing. The pricing is going to be going up in April. I can't I'm not at liberty to say what it's going to be yet, but please take a look at our website. You will find a trading service that I believe is the most consistently profitable service on the market. If there is any better for consumers, we have offered for months now, back since December, that we will challenge any trading system, consumer or institutional. We'll even let the other party pick an independent third party to tabulate the results, and nobody has taken us up on that. Nobody is going to. So, as always, we thank you so much for your time. We hope everybody in your house is healthy. And most importantly, God bless you, God bless your family, and we hope to see you again real soon.